Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, folks. It is 7:50 a.m. Chicago time. Sorry about the 5-minute delay. It's always difficult to do this all at the same time. Okay, so it is Monday, the 24th of November, 2025. This is episode number 2716. A quick reminder that this is a holiday week here in the U.S., and we have Thanksgiving on Thursday, and then Friday's a half day as well. So Thursday and Friday are half days, going to be off. The start of the holiday season here in the U.S. Not sure what to expect of the markets today. We are likely to see continued volatility and pretty much a market that's likely to be thinner. I expect that there will be fewer people trading. Let's just do a mic check, just make sure that everything is working correctly here. Just let me know if you're not hearing me or if you are or whatever. Okay, let's get into it. Here's the conversion trading pre-market summary sheet. The market's in a risk-on sentiment. We're seeing nice little pops across the Magnificent Seven. Magnificent Seven this morning. The German IFO number came in a little light, was expected at 88.5, came in at 88.1. While we're at it, let's look at the rest of the week here since it is Monday. Tomorrow, these are the top tier numbers here. Tomorrow we get PPI, US PPI at 8:30 Eastern. We get retail sales also at 8:30 Eastern. Retail sales are quite important because this shopping season was expected to be quite weak because of tariffs and stuff. But Gap, Walmart, and others have reported that it's relatively strong. So retail sales will be interesting, expecting 0.4. Wednesday, we get durable goods orders, building permits, and core PCE, which is a pretty important input to the Fed. So you want to pay attention to that. Personal income, personal spending. Thursday is a holiday, but the Germans put out their GfK consumer confidence number on the open. And then Friday is a half day here in the U.S. The French have inflation rate coming in preliminary 45 minutes after the European Open. And then the inflation rate out of Germany at 8 a.m. Eastern U.S. time, and then Canada puts out its GDP growth rate numbers. That's what's on deck for this week. I'll let you read the rest of what's on this document. And of course, you can go to x.com/conf trading to get this. I suggest you follow. You can get this there every morning and look at it before the show starts. Let's focus a little bit on this stuff here. So you can see we've popped quite a bit. There's quite a bit of action here in terms of price for the NQ. Little risk appetite coming back in to the markets this morning with the NASDAQ up 212 points, which is a pretty decent amount. Same with the ES. Volumes and ranges are pretty much in line at this point, kind of on the lightish side, 82% for range on the S&P, but volumes in line, 73% in the NQ. This is, of course, compared to this time of day, the average of the last 20 sessions for this time of day. And then we're seeing a pop in cryptos taking an absolute shellacking over the last couple weeks. Just people, banking, cashing in their gains, and so that those products have come off quite a bit. Gold is holding above 4,000 still, has been flirting back and forth with 4,100. And crude, which has come off a fair bit, has come off of its multi-week balance to the downside, breaking lower, is coming back in a little bit this morning, trading above 58. So the S&P is on a multi-distribution profile this morning. Pretty active price discovery, 204,000 contracts traded. The inventory is 100% long, and the range is 44.5 points. So that's where we stand this morning. The point of control is at 66.65. Currently trading at 66.57, so just below the point of control. The overnight point of control in the S&P can shift to 66.53, 54 or so with enough trading there. So it's kind of an unstable profile currently. One thing I wanted to spend a little bit of time on, I know folks asked about this. Let's do this. So this is the last video that was done, which was on Wednesday of last week. Last week was very disrupted. But Wednesday of last week, we looked at the prior session. We looked at Tuesday, and the primary idea was that we are likely to push to 67.20 if we do not hold this this LIS, this kind of over-under range marked in red, then we are likely to push through down into 65.50. Here's what actually happened last week, just to jump right into. And I'm doing this because several people have asked, have said, we know you're not doing this on a daily basis, but it's really useful to go back and look at what you expected versus what you got. So this is the day we're talking about. This is the day that, so this morning right here is when I did the trader bite. And you can see here that it pretty much played out the way it was expected, kind of in a roundabout way. We ended up pushing to 67.08 instead of 67.20, so that was spot on. It kind of consolidated a little bit on the open against the prior overnight point of control. But we ended up pushing forward, and then we dipped, put in an excess low, a nice little spike low there, and then we ultimately ended up taking the 67.20 right in here. Just after the close, that was the NVIDIA earnings. The earnings were really good, but overall, I found the trade to be quite contested to the upside. It ended up drifting in the overnight session. We opened up in a gap, and then, as you might recall, we opened, tested up, and exploded to the downside since, and we ended up breaching this this support zone from way back. I think it's from sometime in October, and it consolidated in that zone, retested from below the overnight in the overnight session on Friday, retested again, and then we ultimately ended up breaking through it right here, retested from above, and then we ended up pushing back in. So on Friday, we did get a drop below the selling day, which is expected. We expect on a trend day down and the market closing with the auction kind of stopping because the day has ended versus prices having been found. This is why I don't really subscribe to time-based analysis. I'm using a 30-minute chart here because it organizes things in a familiar way. But my analysis is not dependent on time. It's dependent on whether or not the market has found buyers, or if it as it drifts down, or sellers as it drifts up, because that's the mechanism that we trade, right? So I'm looking for it to push lower, find buyers, and it did, and it ended up sitting here inside of Thursday's range, this selling range. And we find ourselves this morning basically holding in the same spot. We've traded above prior close, prior settled, but we are still inside of the range. It's pretty active price discoveries. You can see here, point of control shifting down to that 66.54 that I talked about at the beginning of this broadcast. But overall, you know, this thing is checking both sides. We have a pretty weak. Let me turn down my news feed here. We have a pretty weak low, pretty weak high. Look at the high on this. Look at the quality of that profile. Very poor highs and lows. And we are stacked basically, as I shuffle this forward, we're stacked right on top of the MC point of control in this area. Not my favorite setup here. We've basically been trading inside of this zone here for a few days. This is your critical area. And what we expect in here is we expect further compression, further consolidation, sucking in energy in the form of volume. And then the move out of here is expected to be relatively aggressive. Will that move happen today or tomorrow or Wednesday, anytime this week? I don't really know. I just know that we are opening on top of the overnight point of control, on top of the full session VWAP and full session mid, on top of the MC point of control in this region for all sessions. This, for anybody who's done the accelerator program at Convergent or anybody who's got experience with auction methodology or looking at the market from the auction perspective, the purist perspective, you know that this is probably needing to balance a bit more. So I expect, what am I expecting as a result of this? I'm expecting false breakouts today. But overall, I expect that given how it tested, retested on higher lows, I'm looking for that high to be taken, that weak high to be taken. So this morning, expecting chop. It may even take out the overnight low, push into our zone again. But overall, I'm expecting this thing to recover and head back towards that 67.20 again, putting us back in Wednesday's action. That's a really weird looking squiggly line. So that's the primary scenario. The 20 again is expected to be in play here. We'll see how it goes given the holidays, but that's what I'm looking for. The secondary is a push up. Let's clear out the week overnight high, potentially Friday's high. If it falls back into the range and comes back into the point of control, the overnight point of control, and the full session mid and VWAP, then we're looking for prior settle to be a higher probability play. And then we're looking for this thing to basically hold steady in here. Basically another day where it's just sucking in more volume and consolidation. That's how we're configured. So we've had an imbalanced day right here, an imbalanced day down, and then we tried to rebalance that imbalanced day by coming back up on Friday, and all we did is we came back up to the fat part of the profile, this fat part of the profile. And so don't be deceived into thinking that, hey, this is likely to continue out of balance. It's very, very likely to balance out given the conditions that we have here. Okay? So that's what I'm looking for in the ES. Crude is very uninteresting currently. It hardly is doing anything. It has fallen below this big balance area. In fact, crude on the market profile chart right here, it's kind of a mess. So crude has been in this big zone right in here for a long time, for almost a month, right? It's been in here. It goes to the high, then it breaks down, then it looks like it's opening in the middle, breaks lower, then it opens higher, breaks down, then it gaps up, then it goes to the other side, and it's just messy. Well, on Friday, it fell below that. And so we are breaking a little bit of out of balance. And if you look at the profile here, it is telling you that this is a very kind of a two-way balance-ish but contested area. And this morning we're opening right into the Friday range, and we are testing settlement already. So this is a relatively balanced profile. So for crude, you're going to have to pay attention to the 58, to the 57.84, and then the 57.60, because this is a balanced profile. And if it does not hold the 58, then it's likely to hit the next level, which is the point of control. And if it doesn't hold the point of control, then it's likely to hit value low in this profile. So it's not the sexiest, although crude has been a very interesting trade all year long. Right now, the question is, does it pull back and get back into the range, or are we establishing new value below the 58, and we are likely to drive prices even lower? One of the big pieces here is the agreement that's being forced on Ukraine by the current U.S. administration to accept terms that would actually have it yield some land and some other concessions to Russia to end this war. Ending the war with Russia can impact crude in that now the spigot starts flowing a little bit more, and that's likely to drive prices lower. And I don't know if the market's anticipating that already or what, but overall, crude is looking relatively weak as it's fallen out of this balance zone. I'll leave you with that for today. I'll catch you here on Wednesday, and then Thursday's off and Friday's off. Hopefully you pick something up today by listening to me. Good luck, and I'll catch you at the next one. Take care.